World Bank to assist developing countries to resume growth say more people will fall into extreme poverty globally due to COVID-19. The IMF forecasts global public debt to reach 100% of GDP in 2020. Now the race to World Trade Organization's leadership, Nigeria's Okonjo-Iweala and South Korea's Yoo Min-hye emerged finals. Plus, all is now set for the presentation of the 2021 budget estimate by President Muhammadu Buhari. Details of these and more on Business Express, reaching you live from Abuja, Nigeria's capital. I am Leah Katung Babatunde. Now, the World Bank Group has said it will help developing countries resume growth and respond to the health, social and economic impact of COVID-19. President of the World Bank, David Malpass, in a statement on Wednesday said it would assist the countries as they work towards a sustained and inclusive recovery. Malpass, however, said the pandemic and global recession might cause over 1.4% of the world's population to fall into extreme poverty. The bank also predicted that global extreme poverty was expected to rise in 2020 for the first time in over 20 years due to the disruption of the pandemic. It noted that the pandemic was estimated to force an additional 88 million to 115 million people into extreme poverty this year, with total rising to as many as 150 million by 2021. The International Monetary Fund, IMF, has estimated that global public debt will reach a record high of about 100% of GDP before the end of this year. It said although global economy is coming back from the depths of the crisis, risks which include rising bankruptcies and stretched valuations in financial markets remain high. The fund's managing director, Kristalina Georgieva, said there was also now the risk of severe economic scarring from job losses, bankruptcies and the disruption of education. The safe haven dollar and yen notched losses on Thursday after the revival of hopes for some U.S. spending improved investors' sentiments and appetite for riskier currencies. Now, gold prices were little change on Thursday as renewed hopes for more U.S. stimulus kept the bullion afloat, while investors eyeing the weekly jobless claims data to further gauge the health of the world's largest economy. Now, while jobs were being lost around the world due to coronavirus, some were created and some just managed to survive. Today on Surviving COVID-19, we present you a journalist and interior designer with a fascinating, resilient story, and I must say, against all odds.
Surviving COVID-19 series is brought to you in partnership with the Central Bank of Nigeria.
My name is Bimbo Olorunyomi Seth. I'm a graduate of mass communications. I've been in woodwork terrain for 12 years now, right from 2011 when I left the content development business. And furniture is life to me. It's all about what I've envisaged myself to accomplish in a long time now coming. It comes to mind when I see beautiful spaces, and then it's been said that it's a man's field, but I think I'm enjoying it more. 2020 started off very beautifully until Corona came. We lost 80%. Virtually 80% of our income, of our customers, people lost their jobs, but mine was still intact. We're glad that we have 11 staff off the streets, and then quality control for our jobs is still on top notch in the market. For me, 8 years in the market terrain, I've been able to hold down or retain some vital customers who my processes or my customer relationship attributes have been able to hold down. In our factory, it's been a success story all the way.
Surviving COVID-19 series is brought to you in partnership with the Central Bank of Nigeria.
And as markets resumed this morning, I would like to inform you that stocks lost same midweek, a day after the Nigerian bourse logged best single-day performance globally. The NSE All-Share Index declined by 0.95% yesterday and opened this morning at 28,634.35 points, while market capitalization resumed at 14.966 trillion naira. And away from home, European stocks opened Thursday higher as investors keep eye on U.S. stimulus talk. Let's join Boss Able for the details.
Stocks in Asia Pacific were mostly higher in Thursday trade, with shares in Hong Kong lagging among the region's major markets. In Japan, Nikkei gained 0.95%, while the Topix index advanced 0.57%. Shares of industry heavyweight Samsung Electronics dipped about 0.3%. The firm announced earlier its profit for the 3 months that ended in September likely rose 58% from a year ago. European stocks are also seen opening higher, with global investors keeping an eye on ongoing stimulus discussions in the U.S. London's FTSE opened 4 points higher, Germany's DAX 61 points higher, and CAC 40 of France was also pointing higher. U.S. stock indices were modestly higher in Thursday early morning trading after the Dow on Wednesday posted its best day in months as investors awaited updates on the ongoing fiscal stimulus discussions. Stocks in Africa were mixed on Wednesday and pointing to positive start Thursday morning. Boss Able, Business Express.
It's been a bullish run in markets around the globe, and Jamil Ahmed, Director of Investment Strategy at Naga, a German-founded and publicly listed fintech investment platform, joins us from London to get a hang on what exactly is happening in the global market. Jamil, it's nice to have you on the program this morning.
Morning, Ines. Thank you very much for having me. It's a pleasure to be here.
Okay, great. So how is the market performing this morning in London?
So generally, the market is lacking direction and a clear trend right now because we just had the vice presidential debate between Kamala Harris and Mike Pence. Obviously, with the election coming in less than a month, that's quite a critical market event because there's suggested uncertainty here. If you look at market valuations, they haven't priced in that the Democrats could win, nor have they priced in that Donald Trump and his administration could well get a second term. It's something that I'm not ruling out, and I think that a lot of people are misjudging that polls might be showing that the Democrats are winning. However, polls have been wrong before, especially in developed countries like the US and the UK over the past 4 years. So I think the market really wants some guidance and direction on what the political risk attitude could be over the next month. Along with this, there's some concerns over the second wave, especially in developed economies like Europe, United Kingdom, and the US. You're seeing infections rising again, although in Africa it seems to be more under control right now. And that's causing some concern in the market because you just don't, it's what we call the invisible enemy. You never know what's going to happen. We just hope that it can be contained, but it's actually something that you can't control. And at the same point, we've got key economic data releases that continue to point out that the economies worldwide need more help, whether that's from the IMF, the World Bank, governments, or central banks. We still see the need for further stimulus, which basically, for layman's term, means economic support and extra money. And this is likely the trigger that could then help global stock markets trend higher once again from a more cautious past week or so.
Okay, now looking at the World Bank and the IMF, and now just yesterday, the World Bank came out with this report that says more people are going to fall into extreme poverty. Now, what steps do you see institutions like the World Bank, the IMF, taking that can maybe change the stories around these markets?
I think from there, as a think tank and a world leading institution, what they can do is, specifically with the IMF, they can reduce the stress on loans because many countries worldwide, especially emerging markets in Africa, South Africa is one of the biggest ones as well, they owe a lot of money. Now, obviously, no matter who you are or where you are, also where you are located, you have suffered from this pandemic in one way or another. It's either changed how you live your life, or it's changed how you get your livelihood in terms of jobs. That's the sad fact of the matter. So what they can do is continue to reduce the stress on loans. So that would be basically saying, okay, don't give us the money back right now. We understand what's going on. And also encouraging governments to do more. Because on a central bank basis, we've seen a lot happen. They've actually acted very, very quickly, and so have governments. But a lot of what the governments have done worldwide, and I'm talking collectively now, is they provided money to cushion the fall. So it was basically damage control. A big shock, let's try and cover this floor with something. But it wasn't money or a stimulus that can then provide the recovery. So this is why there's a lot of pressure in the United States right now to pursue and actually approve the second fiscal stimulus package, which is why markets are actually quite nervous. And the same things happen in the United Kingdom with the budgets and so on. And even in Europe, the ECB President Christine Lagarde, the former director of the IMF, is regularly saying in her statements as recently as this week's that governments must be ready to do more. And this is actually what we need, governments to take more action and to lead the people, because the World Bank and the IMF only have so much that they can do and continue to do. And all they can do really is advise.
So it's the earnings season over there. How is it telling on markets there?
You know, it's been difficult. It's a really strange one. Technology companies have obviously done fantastic. So have retailers in terms of supermarkets. The biggest brand here that releases results just yesterday is Tesco. Tesco saw sales boom online because of deliveries and also because of panic buying. So in that kind of consumer industry, it's performed beyond what you would have expected because everybody was having to buy something. So demand was extremely high. But then you look at other sectors, hospitality, tourism, and, you know, stuff you do in your free time, like Signboard, one of the biggest cinemas in the UK, Europe, and also with big cinemas in the US, it's threatening to close down all of its cinemas because nobody's going out. People are concerned to catch the virus, understandably, so they're not using their facilities. So cinemas are threatening to shut down. And we all see the airlines worldwide, they are suffering, no matter, whether it's South African Airlines or it's airlines in the Middle East, Asia, but specifically in Europe, you've got so many low budget flights, but actually have high costs. And they are now suffering from a disastrous lack of demand. And no matter whether it's British Airways or EasyJet or Air France, Lufthansa, this is the industry that's really suffering.
Okay, so we've seen some really good results from Africa, particularly in Nigeria, where just some days back, Nigeria outperformed her global peers to emerge the best performing in a single day. Now, is it proper to say that stocks in Africa have sort of found a way around coronavirus to wade the concerns?
We can't be too naive about it because, again, this coronavirus, we've all seen it now from our own life experience. It moves fast. It's something you can't see coming, and it's something you can't really control in terms of when it arrives. It's a matter of it from actually spreading. So I wouldn't say that Africa can really look past what's happening in the developed world right now, because there could be a second wave. I hope for you guys there won't be a second wave, but we can't rule out the science and the facts that infections are spreading everywhere. I do see a lot of prospects for Nigerian stock markets. One, interest rate policy is extremely high in Nigeria. If you look at everywhere worldwide right now, Nigeria is like on a world of its own, actually. It's a planet of its own with very high interest. Now, should the central bank continue to cut interest rates over the future, and I think it's something that's possible if we do see a second wave, this means there's more accessibility to cash. And investors will look for yield and look for return, and they will, as such, be more attracted to the Nigerian stock market. It's the same trend we've seen in the US in the past, Japan, Europe. It just happens to be making its way over to your country now. But of course, money markets are suffering. So the fact that you've had, the best global performer, you've had your best rise in about 5 years, it's good stuff. We just can't deny that that's one factor. But there's a lot of external factors that are outside of our control. And the coronavirus is something that is outside of our control.
So what will be the scenario now if we're going to lay it still in Nigeria? How do you see, do you really see Nigeria maintaining this trend? And if Nigeria is not maintaining this team, of course, gathered in the last 2 weeks, what are going to be the factors at play?
Sorry, I just lost your connection for a second. Repeat the question.
Okay, great. I was trying to ask you that Nigeria has gathered some steam in the last 2 weeks. Do you see Nigeria maintaining this steam? If not, what are the factors that will make Nigeria not sustain the gain?
Thank you. Yeah, yes, it can. Like I said, Nigeria has a lot of yield. It has a lot of attraction because the policy is so high. And that basically means I'm an investor, I'm looking for a carry trade. That's an opportunity for me. Like, I give you an example. South Africa, obviously a fellow leading African country in terms of economic growth. It started interest rates this year about 7%, but it's actually moved them down below 4% at 3.5% this year. This means that South Africa is no longer as competitive on an interest rate environment. But Nigeria, on the other hand, where you've got interest rates that are close to 10% and extra 10%, this means that there's a lot of yield on offer and attraction. And that yield can also mean more attraction to the stock market for as long as the central bank in Nigeria are a little bit cautious and maybe they look to lower interest rates, maybe not today, but in a future period, because a second wave will hit everybody globally. It's a matter of fact. And on the other elements that can actually prevent more rebounds in the stock market, if US fiscal government do not agree a second stimulus package, this is seen as very negative for risk appetite globally. So I would see that as a potential spanner in the works that might impact some of the positive trajectory and fluctuations you've seen over the past couple of weeks.
So how do you see all this telling on the oil market now for countries like Nigeria that depend for revenue mostly from the oil market? Are there any signs of surprises?
We have an old saying in investing in the markets that you should never be too negative on something, because there's always a matter of something that can then surprise you because the consensus is too wide to one part. Now, unfortunately for oil, the consensus is very negative right now, and it's unfortunate that there's really no way you can see light at the end of the tunnel. Unless a vaccine gets approved and distributed as reputable right now, as in immediately, the global economy is not going to recover this quarter. It's something we can hope for in 2021. So this means that it's not going to be the right levels of demand for oil to push the price up. So this is one concern. And then over the near term, we have problems with falling global economic growth. We've seen in the United States particularly, and also in the UK and Europe, that although economies rebounded after lockdown restrictions, that momentum's now going like this. It's trickling a bit lower. The momentum's not keeping. So we need something to keep that rally alive in order for demand for oil to remain optimistic. And this would then in turn play into its price. But right now, with the current environment, $40 in oil, it's not that bad considering where it could be should all of these unfortunate situations compound together again. Like, for example, back in March, April time, you saw negative oil prices. Hopefully that doesn't repeat itself. So we should be thankful for where prices are, because they could be much lower than this.
Thank you very much, Jamil. I've been speaking with Jamil, and he joined us from London. Thank you.
Okay.
The federal government has approved a $3.02 billion contract for the rehabilitation and the reconstruction of the Port Harcourt to Maiduguri Eastern Narrow Gauge Railway, as well as the construction of a new branch lines and transshipment facilities. The Minister of Transportation, Rotimi Amechi, announced these while briefing journalists after the weekly meeting of the Federal Executive Council presided over by President Muhammadu Buhari. There were also approvals and many others secured by ministries, departments and agencies in furtherance of the next level agenda for sustainable national development.
389.31 million dollars. Then the Bonny Deep Sea Port will cost $369 million at no cost to the federal government. I want to repeat that.
For the completion of the rehabilitation of the Abeokuta-Ibadan Road, it's actually it was a memo asking for augmentation by 788 million naira.
Now, what a foundation is to a structure is what the medium-term expenditure framework and fiscal strategy paper is to annual budgets. In its final preparation to receive the 2021 annual budget, the Senate has approved the 2021 to 2023 medium-term expenditure framework and fiscal strategy paper. The House of Representatives had approved the documents last week.
0 trillion was proposed in the medium-term expenditure framework and the fiscal strategy paper.
We need to work so hard to meet the kind of expectations, especially for funding of our development in the country.
We will do well to take a critical look at the Orosan report.
Now, it all is now set for the annual joint session of the bicameral legislature for the presentation of the 2021 budget estimates by President Muhammadu Buhari. This morning,
is put at $40 per barrel. The official exchange rate is now 379. The total FGM proposed expenditure is 13.08 trillion. Budget that will be presented will be based on 13.08 trillion total expenditure.
the President will be laying the bill at 11 a.m. this morning, and NTA will bring it to you live. Now, this is where we end this edition of Business Express. Of course, be informed that all previous episodes are available on YouTube. You can also communicate with us on Twitter. The handle is NTA News Now. The hashtag is BizX. Business Express returns tomorrow at 3 p.m. My name is Leah Katun. Bye-bye today.